What is a tax lien certificate investing? Welcome back. In this episode, I'll answer your question, what is tax lien certificate investing? Now, my name is Ted Thomas. Since 1970, I've been a real estate investor, and for the past 30 years, I've been involved in tax lien certificates and tax deeds. Now, I changed from regular real estate because I found this business was very stable, and I'll demonstrate that to you over the rest of this video. So welcome aboard. So across the United States, we have over 3,000 counties. Now, those counties, about half of them sell tax lien certificates. You can buy those certificates for $500, $50,000, $5,000, any number that you can imagine, they'll have as a tax lien certificate. Now, those certificates pay a low of 12%, is the lowest I've seen in recent years, and all the way up to 36%. And I'll cover that different states and counties on that in just a minute. Now, this is a business of abundance. If you want to have access to a business where you have incredible chances to make money, that's what we're going to be involved in here with tax lien certificates. Now, these certificates pay 16%, 18%, 24%, all the way up to 36%, and the check is going to come from the local government. Now, you can't invest with Ted Thomas. You're going to invest with the county. You're going to get a check back from the county. Now, this is just a short video. I'm going to come back in just a minute, but I wanted to make sure that you stay to the end, because at the very end, I'm going to explain two mistakes that happen. Two mistakes will happen at auctions, and those mistakes cost the investors a lot of money. And I'll cover those, and I'll be right back. So let me begin, and I'll start out with the basics. To start with, tax lien certificate auctions, or tax lien auctions, and tax defaulted auctions, tax deeds, they've been going on for over 200 years. I didn't invent the system. I just learned how to do it, and I've learned how to teach, and I've done that and taught thousands of other people how to do this. Now, what is a tax lien? Well, first of all, every property in America, with the exception of schools and churches, is taxable. If the taxes are not paid, the local government is going to have some problem. Local government, meaning the county, and in some cases the municipality, they have to have tax money to pay for all the services they provide. So let me give you some examples of that. The police department has to be paid, firefighters have to be paid, county employees have to be paid, you're getting the idea. School teachers, they all have to be paid. That comes from property taxes. So the law of the land is that they'll let you have the freedom of owning property, as much property as you want. You can rent it, you can subdivide it, you can do anything you want with that property. However, you must pay property tax. If you don't pay property tax, you'll ultimately forfeit, you'll lose the property to someone that does want to pay it. Okay, so what's going on here? Well, the local government, if someone doesn't pay the tax, that's going to set off an alarm flag. So the treasurer of the county is not only in the position of making a levy on every property, but they have instructions and mandate to go ahead and collect taxes. Now, if they can collect taxes, that's great. If they can't, they're going to do one of two things. The first thing they're going to do, if it's a tax lien certificate state, they are going to advertise and sell a tax lien certificate. Prior to doing that, they'll give notice to the people in the property, and they'll tell them, if you don't pay the taxes, there's going to be consequence. Consequence in a tax lien state or county is simply this. The local government will sell a tax lien certificate. They'll sell it to anybody that wants to buy it. Now, what's someone doing when they buy that certificate? What they're basically doing is they're lending money to the county so that the county can pay their bills. And in turn, they get a tax lien certificate. Now, that tax lien certificate is powerful because once you own a tax lien certificate, you now control that property. Now, that doesn't mean you can throw the people out. The people still stay in the property. They keep possession. You don't get possession, but nothing can be done with that property. By that I mean they can't refinance it. They can't sell it. They can't do anything until you get paid on a property tax certificate. All right, so tax lien certificates are a predictable, certain, and secure investment. Anybody can buy a tax lien certificate. Sometimes they're $50. Some of them are $500, some are $5,000. Just depends upon what wasn't paid. So all 3,000 counties across America can issue some kind of certificate. In most cases, half of them are doing tax lien certificates. The other half are actually going to confiscate the property. Now, I'm not going to talk about seizure and confiscation on this particular video, but there will be other videos that are on this channel that will show what happens at tax deed or tax defaulted auctions. All right, so let's kind of concentrate on the tax lien certificates. And what the county is doing is a property owner has not paid the tax. So they will publish in the local newspaper and they'll publish on the county website that they didn't collect taxes and that they are now selling a tax lien certificate. Anybody can buy that certificate. This is an interest-bearing certificate. It could accumulate interest at 12, 16, 18, 24, all the way up to 36% interest. So there's a chance to make a lot of money and have a very secure investment. Now, what's this security business? Well, it's this. When you buy a tax certificate, you now have the property as your security. If you do not get paid, you're going to get the property. Now, if this is your first time listening and hearing any of this, you're kind of in shock. But here's how it works. If someone defaults on their tax, they issue a tax lien certificate. Whoever buys it now owns that property as a tax lien certificate. They can't push the people out of the property. They let the county protects the people and tells them, stay there until you recover from your sickness or get a new job or recover your kids from the hospital. Whatever went wrong, you need to pay your taxes. So they've issued a certificate. So the tax lien holder owns the certificate and now is due 16, 18, 24%. If your property owner does not pay, the tax lien certificate owner gets the property. Is that good or is that good? All right, so everybody wins under this situation. How do they win? Well, first of all, the county needs money. So if you're an investor, you're going to buy a tax certificate, you're going to give your money to the county. I didn't say you're going to give it to Ted Thomas. You're going to give it to the county. That means it's protected. It's secure. It's actually protected by the property tax code. So now your money's protected. So now you have a safe investment. Now, if you buy in some states like Florida, you could earn 18%. If you're in Iowa, you could earn 24%. The homeowner stays in the property. They're not pushed out of the property. They stay in the property. So you now own a certificate that controls the property. It might take them 6 months to pay. It might take them 2 years to pay. I don't know when they're going to pay, but you're accumulating money all of that time at a fixed rate that's written right on your certificate. So you're saying to yourself, wait a minute. If someone didn't pay their taxes, they're a deadbeat. I don't want to get involved in this. Well, you do want to get involved because the government is on your side. How's the government on your side? Well, I'll tell you how. The government says to those people, they give them notice, they give them due process notice. Say, we're selling a tax certificate. We're not kicking you out of the property. If you don't pay the taxes, we are going to go through a legal process and give the tax certificate owner your property. All right, so whenever these properties are sold at auction, the mortgage is wiped out. It's wiped off the property. Now, who does that? Well, the treasurer does that. So it's an act of law. In other words, that the legislature dictates to the treasurer what to do. The treasurer either collects the taxes. If they can't collect the taxes, they're going to sell a tax lien certificate and they wipe out the mortgage. Now, that does not mean that the treasurer walks over there, gets the mortgage, and tears it up. The people that signed that mortgage still own the mortgage, but it's no longer against the property. So when you buy a tax lien certificate, you're going to have purchased a property. If they don't pay, you will have purchased a property for basically pennies on the dollar. Now, how can I say that? Well, taxes annually, once a year taxes are 1 or 2% of the value. Well, if you paid 2 years taxes, you've now got 4% in the deal, and the mortgage is wiped out. There isn't a person in the world that wouldn't like to own real estate for 4% of value and have no mortgage on it. So this is a good business for everybody. All right, now the property owner has a legal process that they're involved in. The legal process will transfer the property to the tax lien certificate owner. It will transfer it, and it's not going to be stopped. It can't be stopped because it's a legal process, and they're telling the property owner, when we issue this tax lien certificate, you'll have amount of time. Might be 6 months, might be a year, might be 2 years. The property owner will know that if they don't pay their taxes, they will lose the property. Now, I didn't make the rules, but this is a pretty good way for you to make money. Now, I have students that have gone ahead and bought tax lien certificates for as low as $11,000. They had total all in at $11,000, and the property was worth almost $200,000, $180,000 or so. And the people did not pay the taxes. When they didn't pay the tax, the student ended up with the property, which they sold. They called up Zillow and had Zillow sell the property, and they made a huge profit, over $100,000 in profit. You could do the same thing. Now, every property isn't going to be $200,000. Some of the property is going to be $50,000. Some are going to be $35,000. Some are going to be $150,000. I don't know what's going to be at auction, but I can tell you, It's a business of abundance, and there will be thousands and thousands of tax certificates. When I say thousands, I'm going to show you a couple of examples right now so you get some idea. So I'm reaching over here to a desk, and what I'm doing is I'm holding up a newspaper, and you can see I've folded it in half. This is a list of all the tax lien certificates that are just in the county of Duval, which is Jacksonville, Florida. I'll show you another one from Tampa, Florida. Okay, this is a newspaper from Tampa, Florida. It's called Hillsborough County. There's no pictures in this newspaper. These are all tax lien certificates. In this case, there's 25 to 40,000 certificates here that the local government will sell. And when you sell it, when they sell you that certificate, you now control the property. So these are all tax lien certificates. Across the nation, there'll be a couple of million tax lien certificates. So I'm going to finish this video with two important questions. You can buy as many tax lien certificates as you want. Most people don't go in and buy one tax certificate because on a regular house it'll only be 2,000 or 3,000. So you can buy tax certificates. You can buy 10 or 20. Some people will buy 50 or 75. You can buy as many as you want, and then when you do that, you've given the money to the county, so it's perfectly safe. They'll keep track, you'll keep track, and you'll get paid on every one of them. Question is, what are the requirements for overseas clients? Folks, this is really a business you can do from anywhere in the world. You need American dollars and an American account. So you'll have to register for the auction, and when you register for the auction, they'll give you the rest of the details. All auctions that are online or offline you go to the county to register. So every county in the United States will either have tax lien auctions or tax deed auctions. You can buy from anywhere in the world. I talked earlier about two mistakes that investors make. Not only newcomers make them, but experienced investors do the same thing. So I'd like to see you be able to avoid these two mistakes. And what are they? They're at the auction. And what people do at the auction is they get all excited, they start bidding, but they haven't looked at the property. If you haven't looked at the property, you could end up with a chicken farm. I don't think you'd want that property. You can end up with a property that's been damaged in a hurricane. What if there was a fire? The point is, don't buy what you haven't seen. I always say to my female investors, look, you wouldn't marry the guy if you hadn't seen him. Certainly don't buy a property if you hadn't seen it. So that's mistake number one. Mistake number two is almost the same thing. People get to the auction, they got lots of excitement, they're determined that they're going to make money, and so they start bidding. Well, you don't want to just look at a number on a list and start bidding. You want to have looked at the property, like I just mentioned, but you also want to have planned what are you going to do with that property. So I call that the exit strategy. What is your exit strategy? You don't want to just start bidding to win the auction and bid high. If you do that, where are you going to end up? Well, you'll end up owning something at a high price. Well, you can't sell at high prices. That's not going to work. Those two mistakes at auctions you want to try to avoid. Now, I have a gift for you. It's right below me. It's absolutely free. You can just sign up and register, and you'll receive that gift. And what will happen is you'll get information on how to make money with tax lien certificates and tax defaulted property. So just sign up below.